Good day and welcome to today's product presentation. My name is Carol Darcy and I'm a Senior Consultant at Nolan Business Solutions. Today we will review and discuss features of our Dynamics GP Intercompany POP to SOP module. First, let's find out a little bit more about Nolan Business Solutions. Nolan has been in business and developing extensions for Dynamics GP for over 18 years. With its corporate office in the UK, it also has presence in North America with employees in both the US and Canada. With modules that are embedded in the Dynamics GP system, we offer solutions that help streamline a number of business processes. Our product portfolio includes Advanced Bank Reconciliation, which focuses on automating an organization's bank reconciliation process and improve its cash management function. Intercompany postings and intercompany AR cash receipts simplifies processing of transactions between related companies. Transactions are entered once in the source company and are immediately visible and updated into your destination company. Intercompany POP to SOP, which will be the focus of today's presentation, is ideal for related companies that buy and sell inventory items between GP databases. It is primarily designed for manufacturing and distribution companies that maintain a centralized inventory system. Let's dive in and discuss features of our Intercompany POP to SOP module in more details. By supporting the creation of intercompany trading relationships between related entities, this product provides an automated loop to keep purchase orders, sales transactions, payments and receipts in balance between those related companies. As will be demonstrated in a moment, Intercompany POP to SOP is embedded in the Dynamics GP existing windows, making it a seamless process for users that are already familiar with standard Dynamics GP POP and SOP processes. It is also fully integrated by providing support for companies that have differing functional currencies. As part of our presentation today, we will be discussing a few different scenarios demonstrating the flexibility this module can provide. The first scenario I will walk you through is our base scenario. Today's demo is about two companies that are related to each other and each has its own company database. Company A will be our source company where customer orders need to be fulfilled by inventory items kept in a centralized distribution center in Company B. Intercompany POP to SOP allows Company A to create a purchase order for its intercompany vendor, Company B. Upon printing and releasing that purchase order, an intercompany sales order is automatically created in Company B, where its standard allocation and fulfillment process can be completed. Once this sales order is transferred to an invoice, Intercompany POP to SOP initiates and automates the creation and posting of a receipt against the original purchase order in Company A. With inventory now available in Company A, the standard customer sales order process can be initiated. Let's demonstrate this process in Dynamics GP. We are now in Dynamics GP in our Company A database. We will start our process by creating a purchase order in Company B and Company A in order to get inventory transferred from our distribution center in Company B. A PO is created against our intercompany vendor. And today we are going to be ordering from Company B a basic cart. A unit of measure of each is selected. We will order one of these carts for shipment to our Southwest Regional Site ID. Upon printing and releasing this PO, the intercompany POP to SOP process will be triggered. As we can see, an intercompany order processing report is printed confirming the creation of the sales order entry in Company B. And the original PO is also printed. Now, if we move into our Company B, we will see the order that was automatically generated by our purchase order process in Company A. Notice the batch ID that starts with NC indicated that it was generated by our intercompany SOP to POP process. Elements such as the PO number are transferred between the documents so that full audit trail is kept and between the two documents. Our basic cart is the item created on this sales order with some basic information derived from the setup in Company B. So unit cost of $100 as an example has been associated with this sales order, which is the standard unit cost in our Company B. A price level of interco helps determine the unit price that should be populated on the sales order. So our customer record is associated with price level interco, which is where a price can be defined for our intercompany customer. As a result, intercompany pricing can be different than pricing to external customers. My demo environment is set up in such a way that upon creating an order, there is an automatic allocation and fulfillment process that is happening. That is not required. Our intercompany POP to SOP will support whatever allocation and fulfillment process your organization needs to have. If you have a separate allocation and fulfillment process, at this stage, the order is created in such a fashion that your standard business process can be followed. Allocation and fulfillment of this order can be completed. And once that is done, a transfer to an invoice as the last step can be completed. That's when the intercompany POP to SOP process kickstart again. So upon transferring this sales order to an invoice, we will trigger a PO receipt against the original PO in Company A. Few reports here confirming the transactions. Primarily, once again, our intercompany order processing report confirming that order 2298 generated a receipt in Company A 1202. We have successfully transferred our order to an invoice, and we also automatically get a copy of the receivings posting from Company A confirming that a shipment invoice has been recorded in that company upon transferring the invoice in Company B. In order to complete the process, I am now going to go ahead and post the invoice in Company B. And for simplification purposes, we'll remove it from the batch and post it directly from this screen. We'll spare you the journals. Back in Company A, we can now do a purchase order document inquiry for our intercompany vendor. And confirm the creation of the shipment invoice for the original PO that was entered. You will notice that some information is also displayed, allowing us full audit trail between the two companies. The sales order standard invoice number 2301 has been transferred onto this PO receipt for tracking purposes. Now, after this process, we end up with a vendor invoice in our company A and a customer invoice in company B. Intercompany POP to SOP will also automate the payment and receipt of those invoices that have been generated by our process. So let's go ahead and make a payment in company A against the vendor invoice that was created earlier. So we're going to call up our intercompany vendor. I know that my invoice was $120. I'm actually going to apply this payment against the vendor invoice that we just generated. And upon posting of this payable payment, you will see that intercompany POP to SOP will also automatically generate a receivable or a cash receipt in company B that will be automatically applied against the customer invoice that was generated on that side. So let's go and have a look. Back in company B, under cash receipts, here's the cash receipt that was automatically generated from my payables payment in company A. This cash receipt of $120 is fully applied against the original document, again, for full visibility and audit trail of everything. There's also little things like additional comments that are added, which again, from an audit trail standpoint, just facilitates understanding of where various transactions are coming from. Speaking of audit trail, we also have really nice inquiry capabilities for our product. Let me demonstrate by going to Inquiry Company and Nolan IC Order Processing. Our order processing inquiry will allow you to keep track of all of these intercompany related transactions. For instance, here are a number of intercompany transactions that have been processed between my two companies. If we take a look at the last transaction here, this will be the transactions that we just processed. I can expand this to get full visibility associated with this transaction, noticing the PO number, associated receipt number, and the related order and invoice number on the destination company side or in company B side. I can also highlight the company and do a full drill down to our processing payment inquiry window and also capture, which will also capture the payment related information, so the transfer of money between the two companies. Now, also important to note, in case of organizations where there is no actual transfer of cash, the vendor, the intercompany vendor and customer card can be set up in such a way that instead of transferring actual payment and processing cash or checks, the intercompany or the due to, due from accounts between the two companies can be leveraged in order to keep the books in balance. So as demonstrated, intercompany POP to SOP fully automates the transfer of inventory items between related companies. So organizations can really save time and money on internal processes and instead focus on better serving their customers. There are a few additional business scenarios supported by Nolan's intercompany POP to SOP. The POP to SOP loop can also be directly initiated from an external customer sales order in Company A. Leveraging Dynamics GP's standard PO generator functionality, backordered items generates a purchase order to our intercompany vendor, and upon printing and releasing of that PO, the intercompany POP to SOP process will be set into motion as demonstrated earlier. Sales order will be created in Company B, which upon fulfillment and transfer to an invoice will create a PO receipt in Company A. Again, leveraging standard PO generator functionality, the original customer's sales order can now be fulfilled and transferred to an invoice. We have also adapted our product to support an intercompany POP to SOP process that is initiated and fully automated from an inventory transfer in Company B. By defining an intercompany site relationship, an inventory transfer from Company B will be set into motion for a complete intercompany POP to SOP process. Before we end this presentation, I would like to take the opportunity to address some of the frequently asked questions we get about this product. Some of you might be dealing with entities located in various international locations. So, does our product support multiple functional currencies? And the answer to that is yes. As highlighted in this diagram, Company A and Company B can have different functional currencies and leverage Dynamics GP's multi-currency feature to properly handle multi-currency calculations. In addition, this diagram demonstrates intercompany POP to SOP's ability to handle desired transfer pricing between related entities. Inventory can be transferred at cost or with a profit margin between those companies. A few more frequently asked questions. Intercompany SOP to POP will work with lot numbered and serial numbered items. It will also work in a multi-bin tracking environment with standard inventory items. Intercompany POP to SOP also supports both Dynamics GP's standard and extended pricing functionality. This concludes our intercompany POP to SOP presentation. Understanding that every organization has unique requirements, we would be happy to discuss your specific needs and arrange a more detailed product demonstration. Contact us today at ussales@nolanbusinesssolutions.com or by phone at 303-665-9343. Thank you for your attention and have a great day.